Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Friday, October 22nd, 2010. Well, folks, a very, and I repeat, very quiet day on Wall Street today as everyone is taking a break after a ton of earnings this week. We got Apple, we got Amazon, we got Goldman Sachs, we got Bank of America, a ton of earnings this week, and now the market is taking a little bit of a breather. In addition, the dollar got pummeled at some points during this week. It rallied other times. Ultimately, an exhausting week for traders out there, as those of you that are part of the Research Center know, as those of you that are part of the Intraday Stock Chat know. Now, couple things to go over. First off, part of the valid light volume issue today is the G20 meeting this week. And again, the G20 meeting, what is the main factor being discussed? Currency manipulation, currency wars, and trade. Now, this whole idea of the U.S. continuing to call China a currency manipulator has to stop. Why? Because it's the biggest farce ever. You cannot call another country a currency manipulator when you're the biggest currency manipulator of all. Yes, China has been a currency manipulator for years, decades, whatever it may be, but bottom line is the weak dollar policy by the Federal Reserve is exactly just that. It is currency manipulation. So it's kind of funny and almost ironic, the pot calling the kettle black in many instances, that the U.S. has been yelling at China recently. China's basically saying, you know what, forget about you guys. What we're going to do is we're going to raise interest rates. We're going to pump your dollar up. Bam, it worked for one day, and then the Federal Reserve came back in and pounded that dollar down again. So again, wild trading activity this week, all about the dollar, 99% I would say about the dollar. You have a little bit of economic news in there and earnings news as well. Today, you can see clearly, look at the chart. The market has been in an unbelievably tight range, 50-cent range from the highs to the lows on the SPY. The Dow basically is trading down 25 points. So the Dow is negative, NASDAQ is up 13.5, and S&P 500 is flat, up just 50 cents. So Dow and S&P kind of flat to slightly negative. NASDAQ is slightly higher on the back of Amazon and Baidu. BIDU, Amazon, both having good days after earnings. Now, there's amazing activity here on earnings because Amazon yesterday after hours was down as much as $6. And now today it opened lower and has gone to the upside in a dramatic move here. And again, oftentimes this can be looked at as kind of a short squeeze and propping going on. We know the Federal Reserve is in the market overall, propping up a lot of these NASDAQ 100 stocks to keep the markets flat to higher, and that has been working. So it's either that or you have to look at just a lot of shorts that were on board into earnings now saying, you know what, throw it in the towel. It's not working. The market again pushing Amazon up or Amazon pushing the market up. What came first, the chicken or the egg, essentially. In any case, Amazon is higher. That's keeping the NASDAQ up. Baidu had earnings as well. After hours, it sold off. Again, today it moved higher, gapped higher, and then again forming an in spirit of bullish pattern here. But overall, I think Amazon and Baidu are nearing the end of their run. So you have to say to yourself, that's probably coming to a close. Amazon, I guess, could go as high as I would think 175 to 180 over the next few days, but overall, I think it is coming towards the end of its cycle here. The stock, if you go to the daily chart, take a look at this chart here, folks. A dramatic move to the upside. Last earnings, the stock after hours traded at $100. Now, this earnings is trading at $170 or right around that level. 70% move in the stock in one quarter. That's a lot for a market cap the size of Amazon. Same thing with Baidu. Baidu has a little different chart here. You can see more consolidation into the 20 moving average, which is slightly more bullish. The stock is reacting right to a double top, though, right here, and it's having a lot of trouble getting through that double top right there. All right, in addition, if you go back on the Baidu chart, take a look at that move up that this thing has had. Truly a tremendous move up. Again, granted, it is warranted. I mean, the stock is performing well, but I think it is pricey up at these levels as well, and I would not be surprised in the next few weeks to next month or so, probably after the elections. I mean, that's the bottom line, folks. We have to be smart about this. Chances are the PPT, Plunge Protection Team, Federal Reserve, won't let the markets fall drastically before the elections. The whole point here of the Fed, and they've even said it, they don't want the market to do anything, or they're not going to do anything crazy to affect the markets in a major way before the elections. And that's the way I'm thinking as well. So, again, could you have a couple down days here and there? Yes. It will all be in relation to a dollar up move, but overall, I don't expect a major move possibly until after the elections. After the elections, it's up in the air. We'll have to see exactly what happens. I don't know if it'll start immediately after the elections or wait a little while for a little bit of a correction correction. And again, the markets are up on the NASDAQ 20+% in the last 2 months. Truly an amazing move. All right, going back to the SPY, just touching on it. This is the daily chart. Again, that's more saved for the nightly Research Center subscribers, which every one of you should be a member of. Research Center, $49.99 a month, $50 a month essentially, and you get everything listed under that Research Center. It is unbelievable. The analysis, the guidance, the swing trades, the education is all inclusive there, and you want to be involved. Market, again, you can see here, folks, it opened a little bit higher. Why did the market open just a tiny bit higher today? Simply put, because the overall dollar was opening lower. Dollar lower, market higher. The dollar, since it's opened lower, has moved up. The markets have slightly moved down. Now, the markets are not selling as much as you might think based on a little bit of a move up in the dollar. The reason is the volume. Look at the volume today, folks. The volume is non-existent. We've done 56 million. We're on pace for probably right around the lightest trading day of the year here, and it's in October, late October, which is, again, astounding, but it just tells you that there's a lot of people that know the manipulation in this market is there, and they've thrown in the towel. Now, I don't look at it like that. I would never throw in the towel from trading. I love trading, and there's always a way to trade the markets. In my opinion, anyone that throws in the towel basically just is saying, you know what, I can't compete, which is the wrong attitude. You just have to know what's going on, but you can always trade this market. You just have to be aware. You have to know when to hold back, when to take your shots, and again, be a disciplined trader, and it's all for the taking. And that goes for swing trading, investing, and day trading. Know when to take your shots, know the levels, know the trend line analysis. Everything we essentially teach in the Research Center is part of that, and you will learn that by being part of the Research Center. Okay, so again, spiders flat on the day here have come off. Take a look at the dollar UUP chart. Look at the dollar, and I drew a lot on this last night. This is for the video last night. Today, the dollar you can see floating up. Look at the markets today. If we go to the spiders, what's the angle on the spiders? Floating down. See how perfectly opposite it is? Just a slow float down. Dollar's been floating up all day, and that's where we sit right now. Spiders are up 2 cents on the day. That's it, 2 cents. I expect today to be basically a neutral day, folks. Again, very unlikely that the Federal Reserve and the PPT, Plunge Protection Team, would ever let a big drop happen on a Friday. The reason behind that is, again, when do consumers spend the most money? If you're going to try and increase the kind of the economy, help the economy along, the last thing you want to do is let the markets drop on a Friday. Friday's when the day before everyone goes out, and if you're going to buy your new TV, your chances are you're not doing it Tuesday night after work when you're tired. You're going to be doing it on the Wednesday, on Friday, or Saturday, or Sunday when the kids are with you, when you have the family together, when you have time away from work. So again, always remember that Friday's very unlikely to ever see a major drop in a major drop on a Friday. Okay, so that's the thought process there. Again, look for a flattish day today. Very light volume. I'm guessing about 110 million traded today, maybe 115, but that's around the lightest of the year. I think the lightest of the year was around 100, which, again, there's a possibility we hit if things get any more light here towards the afternoon session. I'll keep you guys posted. Continue to come and join the Research Center, folks. You want to be involved there. Chat room's awesome as well. You can also check out the chat room. And again, folks, be ready. We're going to be debuting our new website late next week, our new exclusive website. Our premium members, again, will only be increasing their validity and their premium nature as we continue to grow, add new features, add new everything, plus new hidden gem next week. I'm thinking, guys, it's looking like a new hidden gem pick coming out next week. So join the Research Center. The last hidden gem right now is up 40%. The previous hidden gem went 200%. Basically, we're averaging 100% per hidden gem, and again, that should be released on Monday, I'm thinking. Again, join up now. Get ready for that. Big money to be made next week. Talk to you then. Take care.